A $15,000 cash balance doesn't really seem like enough money to build out a dividend-focused, income-focused portfolio that's going to pay you a significant amount of dividends over time. But because there's higher yielding income-focused ETFs that offer massive starting yields, comparing that to more traditional index funds, these days that's just not the truth anymore. Now in this video, we're going to go through 5 different income-focused ETFs that offer a massive amount of cash flow from day one to investors, even with a relatively small portfolio, which for this video's example, $15,000 invested. We're going to go through every single one of these ETFs, and I'm going to share with you exactly how much cash flow is potentially possible with just $15,000 invested. Now, every single one of these more income-focused ETFs have all offered a positive total return over time, so these aren't going to be yield traps, at least they haven't yet historically. So if you want to go over the 5 different ETFs and see exactly how much dividend income you can make with just $15,000 invested, make sure to stick around, drop a like down below, and let's get right into the first one. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, also to be fully transparent, I basically own and hold more or less every single one of these ETFs in my portfolio as of right now. But going right into the first ETF that offers a massive amount of dividend income on a monthly basis to investors right off the bat, we're talking about FEPI, or the FANG Innovation Equity Premium Income ETF. Now, FEPI year to date is actually down 8.7% over the last year, and on the max time frame is actually now officially in the red, down 1.13%. Now, this is of course due to FEPI's very curated basket of holdings. The fact that Tesla and other names in here have been basically falling off a cliff as of recently could potentially be offering a massive buying opportunity for those willing to buy the dip and take upon some risk. Now, even though FEPI is now down a 10 on the max time frame, as far as price return goes, FEPI has paid a massive amount of income to investors since inception. Now, I cannot reiterate enough, I'm talking a massive amount of income. An ETF that costs just around $50 per share, more or less, is paying investors around $1, $1.20, or more or less every single month, which is massive. Now, I promised during the intro that every single one of these ETFs are going to have a positive total return. These are not going to be dividend yield traps. These ETFs, even if they trade sideways or down a tad, are going to offer a ton of income to investors. FEPI, for example, with a $10,000 investment since inception, this ETF has a total return of around 17.44%, or an annualized gain of around 22%, and this is over 0.8 years. Now, of course, we haven't really seen how FEPI is going to trade during a prolonged downturn. A lot of the holdings within FEPI are high beta, so this ETF is going to be a little more risky than others. Now, because FEPI currently costs around $50.50 per share, a portfolio with $15,000 could potentially buy around 297 shares of FEPI, which could potentially be paying an investor around $356 on a monthly basis, which is massive considering it's just a $15,000 portfolio. The next income-focused ETF that could offer investors a massive amount of income from day one is one of my newer holdings. I just bought this one as of recently. I'm talking about iSpy, or the ProShares S&P 500 High Income ETF. Now, this ETF is actually in the green on the max time frame. It's up around 6.7%, but keep in mind this ETF has only been trading since around December of last year. All the ETFs that we're going to go through in this video, for the most part at least, have only been trading for a small period of time. So time is going to tell how these ETFs are going to perform in the future, but all we can do as of right now is look back at historical performance. Now, iSpy is another income-focused ETF that offers a massive amount of income from day one, like I said. So far, historically, this ETF has been paying investors around 32 cents per share per month. And even though iSpy has only been trading for a little while, this ETF is already compounding portfolios like crazy. This ETF's total return is 14.59% and an annualized gain of around 24%, which again, the ETF's only been trading for around 0.61 years, but still this ETF is showing some massive potential long term. But because iSpy is currently trading just under $43 per share, an investor could potentially buy around 348 shares with a $15,000 portfolio. And because iSpy pays more or less 40 cents per share per month, that means an investor with a $15,000 portfolio could earn upwards of $139 on a monthly basis in distributions. The next ETF that's offering a ton of income and an ETF that I've been buying now for honestly almost a year in my portfolio is SVOL, or the Simplified Volatility Premium ETF. Now SVOL is having a rough year. The ETF is down around 2 or 3% year to date and over the last year. And on the max time frame, I hate to say it, but SVOL is in the negative, down almost 14%, which is normally a big no-no for me as an investor, but I am digging a little bit deeper. Dollar cost averaging down with SVOL, again as a very small portion of my portfolio, but that's just what I'm choosing to do. Now, SVOL pays a steady 30-cent more or less dividend per share per month to investors, which equates to around 16 or 17% yield, which is massive. Not to mention, even though SVOL is in the red year to date over the last year and in the max time frame, SVOL with those massive distributions has actually offered investors a total return of around 39% over the llast 3.21 years, or around a 10.9% average annual total return, which again, there's probably investments out there that have done better over this time frame. But for investors that want more cash flow and want it a lot faster, SVOL has definitely done that. Now, because SVOL currently trades at around $22.24 per share, this means with a $15,000 cash balance, $15,000 portfolio, an investor could potentially buy around 681 shares of it. And if that investor was getting paid around 30 cents per share per month, that's a $204 more or less payout every single month for a portfolio that's only worth around $15K. Another high income opportunity ETF that just started trading back in January is QQQY, or the NEOS Nasdaq 100 High Income ETF, which also is offering a massive dip opportunity potentially right now, trading at around $49 more or less per share. Now, this ETF is actually also red in the max time frame, and this is due to the fact that a lot of tech, a lot of high beta names have pulled back like crazy as of filming this video. Now, keep in mind this ETF has only been trading for around a half a year, but ever since it's been paying investors around 60 cents more or less per share per month, and this is for an ETF that costs around $49 per share. Now, we saw the fact that QQQI is actually down in the red in the max time frame, but because of those dividends, because of those distributions, this ETF has actually offered investors around a 7.34% total return, or around 14.89% annualized gain, and this is over the last half year. Now, once tech recovers, we're going to have to see how this ETF recovers along with it. Of course, because that cover call overlay, it's going to get interesting, but still, this could potentially be a good option for investors out there that are looking for some income and looking for it a lot quicker. Now, because this ETF currently costs around $42 per share, that means an investor could potentially purchase around 306 shares across their portfolio with around $15,000 invested. And that means an investor, just going off of historical data, could expect around $183 every single month from dividends, which is outstanding. Now, the last income-focused ETF that offers a massive amount of income, but also is in the red on the max time frame, but with that has a positive green total return, is YieldMax, the YieldMax Universe Fund of Options Income ETF. Now, I personally do not think I own any YieldMax across my portfolios, to be fully transparent, and this is because I, for the most part, stay away from the YieldMax products, but that's just me. Now, the ETF is actually down around 8% in the max time frame, and year to date, this ETF has been trading down also. But because, of course, that's just price return, we have to look at the distributions to really paint the entire picture, which the distributions have been anywhere from around 50 cents per share per month, upwards to 73 cents, which is massive, for an ETF that costs $18 per share. Now, I promise that even if some of these ETFs offer a negative price return, the total returns are going to be green across the board, which YieldMax is 13% total return and 24.6% annualized gain over the last half year. So again, not a lot of time to go off of. We're going to have to see how all these different ETFs perform during market drawdowns. Now, because YieldMax is currently trading at just around $18.50 per share, that means an investor could in theory purchase around 486 shares of it. And if this investment paid out an average of around 60 cents per share per month, an investor with a $15,000 budget could potentially receive upwards of $400 or $500 per month in income, which is outstanding. So now that I showed you firsthand how a portfolio worth just $15,000 could potentially offer a ton of income from day one to investors, I lastly want to hear from you guys down below. Out of all the higher yielding income-focused ETFs across the market right now, which one is your number one favorite and why? Drop the ticker symbol in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.